So now we're going to talk about the underused housing tax. Again, this is one of those another popular political programs that was designed without any, I would say, research behind it. And the background, honestly, when this came out after Trudeau was reelected, the Liberal government was reelected, there was so little thought put behind this program that us as the tax practitioners had a very hard time getting guidance from the CRA about it. And there was, and it caused a lot in the first 2 years. It caused a lot of people that were caught in an unintended consequence. So, for example, if you are a Canadian corporation and it is a resident of Canada, you still had to file a underused housing tax if you had a property. Whereas this thing was always meant to be used for and even if you have a rental property that is being rented out in a corporation, you still have to file it. You had to file it to tell the government to exclude it, but you still had to file it. And if you didn't, there was penalties. So the key part with this program, it's changed a little bit now, but it's still not the best program administered right now. So basically, the bottom line is it's a 1% tax on the ownership of a vacant property, and it's based on the fair market value of that property. It's residential properties only. It excludes vacation properties and properties that are deemed commercial. So if you're I'll give you an example. We have one client that has rental properties in BC that are short-term rentals. That area is deemed commercial, so the underused housing tax will not apply to them for that reason, because that area and the units themselves are considered commercial units. If you are an affected owner, you have to file by April 30th of the following year. This is for individuals that are non-residents, for corporations incorporated outside of Canada, and partnerships or trusts that have foreign interests. And the key part is that it's based on your status as of December 31st of the calendar year. And the onerous on this tax or on this filing form is that each individual has to file a separate return for each property that it applies to. So if you have 3 or 4 properties that this would apply to you, you would have to file 4 separate returns. If you share it with a spouse or someone else, now we have 8 in that same example. And this one is based on who actually